Welcome, ladies and gentlemen, and it's to the TradeLink weekly report for Monday, the 15th of September 2014. And just a review of what happened last week before we proceed. Risk warning, all advice of a general nature only. Past performance, no guaranteed results. Reliable result of future performance are the key terms there. Okay, I'm using a different platform today. This one brought to you by Interactive Brokers. This will be the platform that we'll be using, particularly for our US trading that starts in the not too distant future. So this platform allows you to trade both the US and Aussie market. Now, what do we got first up? Fortescue. Why have we jumped right to Fortescue? Let's just rewind back to Newcrest. Okay, here's Newcrest. So we'll cover as usual, cover the covered calls first. We've got 4 running at the moment, and we've got about 6 spreads. So with the covered call first, we've got the Newcrest October 1050s. You can see it's actually there's 1050 around about there. You can see last couple of days, last couple of weeks actually, it's come back down to around the 1061 mark, as you can see on the screen there. And but however, with the time decay that's been eating away at that option over the last 6 weeks, actually still up 2.55%, even though we actually entered this share at a lower level than it is now. So that's the magic of covered calls coming out there, I suppose. What else do we have? We've got Westpac. There we go, Westpac showing on your screens now. This one's come right back. We're actually only a few cents up on where we were, because we entered around, I think it was this day here. You can see right now it's actually a little bit below our price from back then. But with the that arrow doesn't look too great, but I think you know what I mean. But with the time decay again working there, still up by, albeit a measly 4 cents. But Westpac coming right back, and definitely a nice buying opportunity. In fact, those that have missed out on this trade, probably not too far. Well, you're only 4 cents away from actually being re-entered at that limit there. So one to keep in mind if you want some bullish exposure to Westpac, particularly with the dividend coming up soon. Okay, next screen is Woolworths. And here we've got the 36th strike November. This is entered about a week and a half ago. I think it was around this one of the green days there, I think it was. Now you can see it's obviously dropped, but that's also because the dividend has been paid, which explains the gap in share prices there. Nevertheless, the share price has still fallen in the last couple of days, and that's where we see ourselves down about 10 cents or 0.3% on this trade. Nothing to particularly be alarmed about, particularly also when we can see that the share is on around that support level, which is $35. It's holding up well around there at the moment. Looking at the screen, it's actually hit 35.21, as you can see. Okay, this chart BHP, you can see it's been a little bit choppy over the last couple of days there, just holding in a sideways pattern, actually holding up pretty well considering the drop in iron ore. It's continued to drop over that same period. Hit a new low, I think it was around the $82 mark on Friday, and up 10 cents since then. Now this trade, since we entered on the 12th, which is only a few days ago, actually up about 0.5% right now, with the share just at the top end of that range, around that 35.93. That sees the trade up about 18 cents, which is 0.5%. Still very early days there. We've got out till November, so just want to see it move up to that 36.50 level and beyond, which is there. And we'll be very happy with that one indeed. Okay, now switching over the spreads. Macquarie first up. Macquarie's having a great day, up to 58.82 it is, 58.82. We want it to be above our sold strike, which is 56.99 around there, and our board strike at 55.02 around there, and you can see it's well above that. Now that trade's sitting at the moment at a 45% profit on risk, and we've only got about 2 weeks left on this trade, 1.5, expires in 2 Thursdays time. So as long as we can see above that, stay above that 57 mark, which is looking well at this stage, then should be able to lock in the full profit on that trade. Okay, now is the long-running Woolworths trade. Has been hit a bit, obviously, been a bullish trade, and Woolworths coming back over the last month or so, but still in a nice position as covered earlier in the Woolworths analysis. On support, want to see that move back above 36, in particular 36.50 for maximum profit there for October expiry. At the moment that trade sitting at a 10% profit. Now having a look at CSL, really not much difference to report here. Even in the last sort of 3 weeks. At this stage it's unlikely this one will reach a profit. At the moment we're down 50%, and that's really just due to this amazing gain that occurred last month. Did want to see it pull back into the 60s, but that hasn't occurred. So at this stage nothing to do, and we won't bother about closing out the trade. We'll just let it the remaining leg expire worthless. Okay, the XJ trade is actually looking a lot better at the moment. Let's you can see there, if we draw a bit of a trend line, we're approaching that support level. It's around that 54.50 mark, just on the last 6 months or so of price action there. Have had a bit of a bounce, but there might just be one more day in it. So just weighing up with this current trade, it was looking a little bit nasty when the market was way up here. But with the market coming back, we're only 38% behind on this particular trade. It is still out to October, but we'll rely on a break on this trend line. So weigh that up, we might have an early exit in that next day or two if we can get a bit close to break even. Otherwise, we'll reanalyse where things are in the market for that particular trade. The last 2 trades, Fortescue and Westpac. With Fortescue, these 2 trades just entered last week. Fortescue, a calendar spread at the $4.20 mark, which is about here. Fortescue, like BHP, just even though the iron ore price has fallen over last week, the share price actually at the very top of that band at $3.99, which will work very well for our sold September option. We'd ideally want to see it hover around $4 to $4.20 between now and 2 Thursdays time, or even a small gain above $4.20 is okay. But if we're at the bottom of that channel and looking for a reversal there, that will be spot on to gain a profit. At this stage, that trade just sitting at a very small profit of 10% in very early days. And lastly, Westpac. Provide the analysis on this a little bit earlier with the covered call. With the diagonal spread that we have on this, we sold the 30 Septembers, bought the 34s for October. Price action like we've seen at the moment, with the stock around that 34, a little bit below, is actually quite good. We want to see it below 34.30 on September expiry, so that option can expire worthless, and if we have a gain then in October, you have uncapped profit potential there. So that's what we're looking forward to here, particularly if we can find some support around that 33.50 mark at the lowest. look, even if it goes down to $33, if we see a similar bounce back, then that's okay as well. But at the moment, just like to see it stay below 34.30. That trade at the moment, we're down 4 cents, which is down 11%, just due to the recent fall in the last day or two. Alright, ladies and gents, I'll wrap it up there. So overall, what else? Actually, one trade I failed to mention was QBE. Now presented on your screen, we locked in a 4.2% return on QE. That report was out, I think, on Thursday. Refer to your email if you want to see all the stats. But I think that that trade performance over about a 6-week period was a 35% annualized return, and that trade was closed early, really because there was very little left in it, since we're well above the $11 strike. Which was sold for September, so an opportunity to redeploy funds elsewhere. I think some people took the opportunity to redeploy into BHP, which has so far paid off twice as much than if you were to just stay in that QB. So that's why we do trades like that. Alright, now I can let you all go for the day. Thanks very much for your attention there, ladies and gents, and we'll talk again next week. Thank you.